Hello everyone, Pigmoney here with an update on the stock investment challenge in the Pigmoney Reloaded series. If you've been following the channel, you will know that recently I have switched investment platforms from eToro to Interactive Brokers. The change couldn't have come in a better time, as it gave me an opportunity to buy back some stocks at lower prices as the market was undergoing some major correctional movements. Let's see how the month of March went with all the turbulence in the markets, what my balance looks like, and what new stocks I have added to my portfolio. In March, there was no shortage of market-shaking news ranging from geopolitical tensions going through the roof, inflation measurements showing signs of rising, interest rates not getting lower anytime soon, and so on and so forth. As I've been saying in the previous episodes, the stock market was ripe for a major correction since the beginning of this year. At the end of the third month, the price of the Nasdaq 100 index has retraced to the 19k level, and there is a good chance it will go lower from here. To support this with some technical analysis, this retracement coincides exactly with the first level of the Fibonacci retracement scale. You know, I was really upset about eToro forcibly closing my positions in February, but it turns out it happened exactly when the market was at its local peak, so I guess I should be thanking them for making me take profits and reinvest at lower levels. This drop from 22k to 19k means that it's a decent correction, and I use this chance to buy some stocks that I found to be reaching entry levels according to my strategy. The total value of my portfolio this month is down by 8.6%, which is slightly better than the overall market dump on the Nasdaq, which measures at 14%. As a reminder, my total investment in stocks was no more than roughly $2,300. Today, the combined value of my stocks and available funds is somewhere around $3,800, which means that I am still up around 65% on my original investment. As I had to switch from eToro to IBKR, the performance charts don't show this, but still, it's good to keep in mind. In case there is such a pullback in the markets but the economy is in an overall healthy condition, I take the advantage and pull the trigger on some entries. I start building up positions in some companies. These days, the most hectic sector is the automotive business. I have always planned to have a range of positions in different car maker companies, one from the US, one from Europe, and one from Asia. I got Tesla during the latest market dump quite simply because the problems the company is facing is temporary in my opinion. In 4 years' time, the political hysteria around Elon Musk's person will have faded away for sure, unlike the significance of the products that Tesla sells. I also entered Stellantis, a company that holds several car brands, mostly European ones. The entire European car market is on thin ice right now because of all the uncertainties about tariffs and the looming international trade war. However, I don't expect this to last for too many years, so I consider this a buying opportunity. I will scale in as the price goes down with a target of having a maximum of 20 or 25 shares, not really more. From the Asian side, I have BYD on my radar, but today it is a hot stock, so I will need to wait for a while until the price action cools off, and then I will enter. BYD is the most serious competitor to Tesla, coming from China, and the price-value ratio of their cars is quite impressive, so it is an obvious choice for building a global share in car companies. The other entry I had in March was in Reddit. Reddit made a stock market debut not so long ago, and after the initial hype, the price started to retrace to normal levels. There is almost a 50% drop from the top. This is quite normal with newly introduced tech stocks, so I am not concerned about this volatility. It just simply needs some time until the dust settles. I chose Reddit because they have a unique position in the market today. No other platform can really compete with them. The user base is robust and loyal. From here on out, the only question is monetization. In other words, can Reddit make enough money with all the traffic they handle? The interesting part here is that Reddit would not rely only on ad revenues as a source of income, as most social media platforms would. Instead, they would capitalize on user-generated content that they sell to AI companies who train large language models. As the content is mostly text-based, original, and genuinely user-generated, it makes it an exquisite source of material. The latest pick on my watch list is GlobalFroundries. The logic I have here is similar to the one about Intel. Chipmaking and semiconductor manufacturing is becoming an increasingly important area of business, and it is even more crucial to have locally secured plants that can produce the electronics that are needed for running our computers and devices, not to mention data centers and AI-oriented powerhouses. As GFS has a significant presence outside of Asia and plants in the US, they represent an interest of national security. That's why I'm keeping a close eye on the figures. The price of GFS is hitting the lowest levels. There might be a little more room to the downside, but overall it is already at a decent entry range. Looking at the charts, it seems like we reached a major level in the correctional phase of the price movements. It does not mean that there is no room for further downside. If this level breaks and there would not be any positive news that would change the sentiment on the markets, I think we could easily see the Nasdaq visit the next major support level, which will be this top right here, also coinciding with the next Fibonacci retracement level. I still have some free liquidity in my account ready to use for purchasing or rebalancing some positions. Should I run out of available funds that I have, I will probably start depositing some more around April, May, depending on how the markets will behave. Alright guys, this was the summary for March. These are interesting times for sure. Volatility is great as it always provides some opportunities for buying shares of companies at a discounted price. As for the quarterly results of my portfolio, I started this challenge in January with a total valuation of $3,628. Today, even after such a dump in the markets, I am at $37.90. This is an increase of 4.4%. I expect April to be equally challenging. I don't think a massive bull run will happen just around the corner. I would see a bigger chance of that coming after some reassuring news about inflation or easing in the tension of global politics. I hope you like the content. Let me know in the comment section if you found any interesting stocks lately that you consider to be undervalued. I would love to see your individual picks. See you at the next month's video. Until then, keep your funds safe. Pigmoney out.